Cool. So, as I was just saying to lads before I recorded, I'm gonna try and get through everything tonight. So, what I will start off with is let's start off with just imbalance. Imbalance is a nice, easy, quick one. Hopefully, the lads that will watch us back, I'm hoping obviously they know what imbalance is. I'm just gonna uh, give a bit more of my explanation on the whole thing. So basically, what it is, or what it appears to be, is just a large push. All this is considered imbalance. Now, obviously, I've marked something a bit higher in that for whatever reason. I'll just take a quick look before I move on, so I'm not chatting shite for everybody. So there's a little bit of a market gap there. On the five, obviously, I was on the 10 second just before this. I'm now on the five. We can see these pushes slow down a touch. What's on the 1 second? Yeah, so I've obviously just marked the gap. And the lower we've got, more so there's probably any imbalance here, not the rest of it. But I think it looks like it taps in and fills this market open, not market open, sorry, this void here. There's a little bit left under there. So imbalance is basically just a large injection into the markets, which causes moves like this. Now, that's what, in 20 seconds, that's nearly 19 pips. Um, Bastard. Cough. So there's a fly. Yeah, nearly 20 pips in 20 seconds. So something I mean, it's probably news to be fair, but it's major and it's deemed to be able to move the market 20 pips. I have no idea how much money it takes, but I'm assuming it's going to be hundreds and hundreds of millions to be able to cause this. So something causes this here, and then that's obviously what creates the overpowering of this one's a buy because obviously it's green candles and it's up. So there's an injection of money and buys, and the buy orders far outweigh the sell orders, which is what this is. This is just the buys and sells just ticking through each other and deciding which one's got the most in, and then big impulse of money into the market. So from what we can start to think about that is that why is this important? So what the what the general theory or what I believe it is because we would say this section here. Where's me pen drawing thing? Delete that. Get the magnet off. So because oh, God, this section here, all of that. If you think of it like a business, I mean, we should all treat trading like a business, but like there's a huge injection of money in this, which is all buy orders. Technically, we're supposed to have a sell order for every buy order, but this is all buys. So in theory, we like to think that price is going to come back and fill the imbalance. Now, obviously, we're on the lower time frames, and this is where I believe the real imbalance happens. I don't believe in this imbalance on, say, the 5 minutes or whatever, but what we would believe is imbalance. But once we get to the lower time frames, like I said, we can start to see that these big impulsive pushes happen not very often, and the really big ones are very infrequent, and they're ones that generally hold a lot of weight and power. Supply a few candles. Now, obviously, I'm looking on the five at the minute. The five is a good place to show where you might want to find these lower time frame imbalances. It's a good is a good place to start, but like I say, as we look down to like the 1 second, there was a tiny bit a bit lower in that, not the whole thing, and obviously there's a little void in price action. I don't really know how I feel about the voids in the price action that we see. Obviously I marked this one, but I don't know whether it's just a delay from the time changing over. Now, obviously when one candle finishes, another one starts. There's going to be a little split second or two before in the changeover, and Matt fell asleep. He'll be on any minute, I'm sure, or he'll get back to sleep. Um, yeah, so when the candle changes from one candle to the next, obviously there's a tiny bit of delay. Here's Matt. So I think the voids are maybe that. So we should maybe think about treating it like imbalance because once one candle finishes in that few split seconds when it opens to the next candle, then that price has pushed up like it would be an imbalance candle, but it shows up as a void. So I think it's imbalance. So if it's a big void, I'll definitely class it as imbalance. If it's fairly small, not as much. You treat it like a smaller candle, I guess. Um, so yeah, that's imbalance. And obviously the other way to look at it is when we look at candles, if we look at all this, there's only two forms of sort of price action on it anyway. So obviously there's balanced price where there's no imbalance, and then there's imbalance. So quite easy to distinguish the two. Obviously there's big pushes, and I mean that's spread out, so ignore that one. But little down pushes like this kind of thing, that's imbalance. Um, I'll move on to liquidity from there. I'll get back to the imbalance sort of side of it a bit later on. But no, I won't. I'll get back onto it now. So why it's important is, so I'm going to go back a few minutes. When imbalance is created, it's all buy orders. I took a detour. Um, what we like I say, as I said, we need to get. There's supposed to be sell orders for each buy order, and obviously because there's loads of buys in here, the idea is that price needs to come back and collect the sell orders that wasn't taken in this because price moved so fast. So with that in mind, we would obviously start to think that we want our entries to be at the point in where imbalances get filled. Yeah. I think this about fills it later down the line, but it's not important for now. Yeah, just as you see here, it gets filled bang on there, just a touch past. So if you imagine that imbalance are marked, this yellow line is literally, if that was an entry point, as you see, it's done something there. It's obviously not the main move, but you know, it's still if you had the confirmations, I mean it's only 30 pips, it's no really, but as you see, prizes come to fill it and then done something. Obviously, beyond that point, if you'd have had favour confirmations and it would start taking these highs first of all before retaking it, then yeah, great. There might be a trade from that as well coming up. We'll look at that a bit later on. If someone reminds me. Uh, so that's imbalance. I'll cover a bit of liquidity now, so I'm going to have to find an old chart with lots on. Nice stuff there. Try and find some clean. Like I say, if there's any questions, guys, chuck them in. Mm, Euro J. I know I had loads on that before. Mm, I don't know. Bigger time frame. Here we go. Here we go. Old markings, ideal. So liquidity. So for trend, I'll cover trend lines first. So trend lines are just three touch points, um, or more. Minimum of three. Um, no, there's no maximum as far as I'm aware. It would be unlimited, I guess. But basically, the idea is that let me find a nice, clean, easy one. Like these ages ago, some of these look a bit crappy now. sure a lot of these would bang on. This one here. So we've got a touch there, touch here. Marker. Touch, touch, touch there. So a trend line, obviously I'll call it a trend line, others will just call it liquidity or whatever. It's basically, I suppose it's a resistance point, if you like. So I'm very particular. So I like my touches to be bang on, which is why I use the magnet tool, obviously on both ends, and then obviously I'll check the middle to make sure it's bang on. I'll maybe occasionally allow a pipette, maybe two at a push if I'm feeling a bit bored, maybe. But the reason why I like them to be bang on is because if you're if say like if this middle wick there was just to have passed through the the line, I'll draw a line to that. So if that wick would have just passed through there, then what I'm basically saying is that well, I mean obviously it's dog shit anyway, but it's a bad example really. Let me just do it to this one. If I'd have said that one and like the third one was a slightly off or anything like that. What you're basically saying is that two touches is okay. Obviously, we've got equal highs here, two, which is two. But if you're with a trend, if you're saying two's okay and the one's slightly off, you're kind of saying that 2 points is okay. And then you can start to think that any two wicks would be acceptable. And it's just, like I say, you could take any two random wick highs, and technically that would meet the rules for your liquidity when it's just not going to stand up long term to any sort of like strategy to help you out. So got to be three nice touches and clean. By clean, I mean good touches, perfect, not beyond on that one in any way. Just delete them quick. So not that one. Rid of them. Right, then we've got equal highs, so these need to be pretty much bang on as well. So as you can see, I think we're a pixel off maybe, but good enough. Equal highs, just two touches. Vertical, no, horizontal, sorry, horizontal. And then the other form of structure is structure liquidity, sorry, is structure highs and lows. So I'll get to structure shortly, but just assume that you understand what I'm saying for now. These highs and lows marked here are technically liquidity. And how we determine these are is you obviously this is a bullish sort of trend at the minute, or for this part anyway, is the low must be put in and then it must take a previous high. So this high gets taken by this, that confirms that leg, it pulls back. That once this high is then taken, this one's confirmed. So these are technically liquidity points, and once you've drawn your structure out, you can start to say mark lines across these, and once they are taken, this is when this one takes this one, that's liquidity taken kind of thing. And I say this quite regularly. I'm not sure if anyone actually fully understands what I'm saying, but what I do say is the only thing we can guarantee about liquidity is that price wants to pass beyond it. So obviously I've got all these lines in that I've marked as liquidity. Now, if I was to extend them all, you can kind of see that price just passes beyond them. It doesn't mean reversal. It doesn't mean continuation. It is just liquidity. I'm not going to actually extend them all. I'm going to assume you can all sort of see that if you was to imagine if you extend that line, this gets taken here, this one gets taken here, this one gets taken with this down push, this one here gets taken with the up push, this one gets taken by something over here. Yeah. So the only thing we're waiting for is liquidity to be passed beyond. Now, obviously, sometimes you'll see the liquidity late, sometimes you'll see it before. If you Ideally, you would see it before because then you can maybe decide whether if there's going to be more confirmations in that sort of area to give you the trade to get in. But if we think about, obviously, we know the only thing I can tell you for certain is that price wants to pass beyond liquidity. So if I bar replay here, um, I'll turn this one red. I'll turn these blue. Anyone around it blue. Um, Turn it back red. So all we can tell you is that price wants to pass beyond it. So obviously, if price was here, we would say I would always be saying now this is dead funny because I've just spotted it, but I wouldn't have had the liquidity trend line this one marked at the time. I would be saying you wouldn't be selling, putting a sell on before this trend line has been taken. Obviously, if you've got it marked up, obviously if you don't spot liquidity, you can become it. So selling this sort of sell order here that I've got marked, it Littleton's awake. I thought she was in bed. So yeah, ideally selling from there wouldn't be ideal because you'd be maybe concerned that price is going to come and pass beyond this. Now, obviously, I was looking for further confirmations. I was looking for it to come up anyway from a from me 415 setup. I'll maybe try and cover that in a bit, but basically, I wanted it to come down from here to an entry and then take that out anyway. So you can use it in both ways. You can use it as your target. You can use it to avoid getting in a trade if like, I would not be selling at this point here when it's so close because I would expect it's going to take it. So leading on from that, you can then say that your entries should not be just before liquidity is passed taken. Now, obviously, that includes all forms of liquidity, but there's always going to be um, now. Obviously, I said that the structures are liquidity. Now, that's always going to be the case. Is if you get a reversal, say up here, there was a sell off from up in this structure leg here. That's technically a liquidity point. So if you're trying to sell from up there, that technically goes against that statement. But you know, if you get your confirmations and it's there and you're expecting it to go down from there, you've got to take it, kind of thing. Because this is obviously so much liquidity that if you didn't take the risk of it might take you out and take liquidity, you're never going to get a trade anyway. So obviously, but yeah, ideally, if you wouldn't do it so close to liquidity before it's taken. Uh, I think that covers everything with liquidity. I think obviously with liquidity as well, from the perspective of finding trades, like I say, you're always going to want liquidity to have been taken. And then obviously, if there's other liquidity, obviously, like I say, you can use it as a target as well. But yeah, before it's taken, you're not really going to set your orders up until it's taken. Because like say, if your stop loss is close to this one up here, you would be getting taken out. From that as well is obviously, as we discussed, it doesn't necessarily mean reversal or continuation because it happens both ways. So this one being taken, it just continues down. This one, this one here means it gets reversed. You know, it does both. So that's why, that's why I say the only guarantee is because I don't mean it means reversal or continuation. It just means the price wants to pass beyond it. And what I'm basically saying is by that is what happens after liquidity is taken is what will tell you what direction you want to be trading in. So further confirmations. Now, for me, that's lower time frame structure breaks. and obviously the higher time frame structure overall kind of thing. So I'll get onto structure in a minute, but like I say, there was a possible sell there. I was looking for the overall buy. This just missed my entry, actually, I think. But I was looking at higher time frame structures, so I was kind of expecting a new overall high above this. It just missed me, but that would have been a very nice buy because of structure. So structure is, let me find something that's fairly clean and nice to read. Structure is fairly straightforward, but also extremely difficult and confusing. And I know that's contradictory, but like there's a few only like four rules that I've made for it. Um, but it's probably the hardest one to actually learn. So for the new lads that watch this back, um, you're going to get a lot of this wrong. But I think it's maybe the most beneficial thing to learn. Um, like say you can kind of do it without the liquidity. I don't think I could trade without the structure side of it. So I tend to work to uh three kind of structures really. So I've got red, I've got orange, and I've got green. I call red my 4 hour, my orange me 15, and my green me one. But that's that's just a reference point as such. I mean, this could be any time frame. It doesn't matter. I'm on the daily. It's still a structure on the daily. It's generally higher, medium, and low, I guess. And I suppose depending on the chart that you're on. So some charts move a lot more than others. So sometimes like I mean, this one got marked as a four. I mean, this is a huge swing going on here, and it's taken. I mean, we're in 2 years in to make a new low from the high because this doesn't take the low. So that means that this is all internal and nonsense kind of thing. Although it was a nice, beautiful place to take a trade from. um, so yeah, sometimes me 4 hour or higher time frame is going to be a bit smaller than this, depending on how well the chart moves. I can't tell. I'm not collecting data and I couldn't tell you which ones they are that vary. It's just I can see three structures as I'm looking at the screen. So what the what the rules for structure is obviously I'm showing you this one because this one's fairly clean looking. I'm focusing on this red one at the minute, but we can just pick a random kind of high. So if we start over here, we put a low in, price pulls back, it then puts in a new low. So once this low here gets taken, that confirms this high as the new high because this was the original one. I should maybe number these actually. One, one, oh, one. Let's turn that red. Turn magnet off because that's doing me anything. Two, three. We're getting proper tonight, guys. This is looking good. Four, fine. I must look dead professional looking at my keyboard for where five is.
Thanks, Nextly.
There you go. Here we go. Cheers for that,
There you
mate.
go. That's audience interaction for you, right?
It was imperative, mate. I was about to make myself look like a dickhead. So now that I've written the numbers, I don't know why. I don't think I've ever done this before. I wrote the numbers on to explain it, but So we're starting at one, which is this high here where my cursor is and flicking up that cell chart or cell order, whatever it is. So one puts in two, yeah, which is quite obvious. It's just downwards, yeah. And then we start getting some bullish price action. We don't take the high of one, but we then retake number two. So high, low, lower high, lower low created. When three takes two and goes to four, and only when it passes the level point of two, that confirms number three. Yeah. Then obviously from four to five doesn't take number three again. So we then obviously lead from five to six. So that's my higher time frame structure. Pardon me. What we can in all of these kind of areas is now I always say obviously this is a bearish structure. Ideally the top 25% of each of these swing points. So when four when four is sort of beyond the level point of two, you can come on the chart and you can kind of just go this top 25% there. If price comes into there and I start getting lower time frame breaks to the downside, because we can use a bit of what can we use? Let's say we're expecting dollars just in decline. It's come back up into this top 25%, as I just said. We kind of know the dollar's on its ass or whatever, or you're expecting it's still gonna lose we it's still gonna weaken over the course of like the next couple of years or whatever. Whether that's through news or politics or whatever, but you kind of anticipating that you're not expecting this high to be taken. So from there, we can start to think. Obviously, I'm on the daily, but this is my 4 hour, and I'm only on the daily, so you can see all of this in one. Yeah, but like I said, this is my 4 hour or higher time frame. You can view it on the 2 hour. It doesn't matter as long as you can see a higher time frame structure going on, and you can mark the points from what we just went over. So once price comes back into this top 25%, we can start to think using structure, what would I want to see before I would consider the sell? You're happy that the dollar's still going to weaken overall because it's been in a huge decline for ever. Years, is it? Definitely. Yeah. I mean, forever. Since the day it was made, it's been in decline. So I'm not really seeing anything that would tell me any different, So let's go back. So it's come back high up into the top 25% here. What we can do with structure is to start use smaller time frame structures inside of the red one, the higher time frame. So like I say, it doesn't take the high here. That's wrong. I know it should be there. Um, and what we can just zoom in if I open this chart up. So we've come back into this top 25% of this leg here. We're not expecting it to take the high, which it doesn't, because the high is the top of this box, red box. Took magnet off, but but what we do is we can mark leading up to it is a smaller time frame structure. So we get I'm just picking one at random here. I could start lower, I could start higher. But I would expect you to at least have maybe a couple of swings up to it, maybe if you're trying to mark it. So again, it's the same rules for a lower time frame. I've got experience and I can roughly see my medium time frame inside just as these candles are performed as well. Now, obviously, if I was doing it live, if I was looking to catch this sell, obviously it's played out, but I would also double check it on the lower time frames, on the relevant time frame, just to double check that it's right. But from here, I can kind of see that this is a high, puts in a low. We start to get a bit iffy up here, but technically that's a high, that's a low, high there. We could get a low there, the overall high, and then one of these two. This one definitely takes it. I don't know if this one does as well. So I'll just mark it there for now, turn it orange. I'll zoom in so we can. Yeah, this one here also takes it as well. So what you could do from that point is top 25% here. I know I keep saying that. You could keep your eye on it, and as you was marking this orange structure up, leading up to the overall high in that zone. Obviously, it's gone very high into it. You can be setting alerts or lines drawn on the bottom of these lows that get put in. Now, obviously, this, like I said, this meets the rules for them. But structure, sorry, it's the same rules for the higher, for the medium, and the lower. The rules don't change. As soon as this one here is broken, so that's your 15-minute break. There's that's confirmation of that we're possibly going to turn bearish again because obviously all this price action up here is bullish. We're not expecting it to set high. We get a lower time frame than the higher one, telling us, yep, we've broken lows. There's a good chance we're going to turn bearish, which obviously it does. Yeah, it comes back again, but it still again it doesn't take the high. So, which is why I've got this one marked, and it's a friggin' mega trade. But the structure on it's so clean that it's good for me to show you guys. Now, it's not always going to be this clean, um, and obviously this has played out, so it's easy to come back and go, here it is, kind of thing as well. So if you're obviously whatever time frames you're going to be using, what the general rule I will tell you all is if you're using say the high time frame and you're going to use the medium time frame for your entries, you're going to be sticking with the higher of the two time frames is your overall direction you want to be trading in. Now, obviously, this was sells because we've got the higher one bearish. I would then say you want the medium time frame to tell you that it's turning round before you actually get in. Obviously, as you see, after it breaks that low that I've marked up, it comes back and taps into something in there. um, and then obviously, so your entry would be somewhere in this orange zone. If you was just going to get in at that point, now I was looking to at the time I was doing it slightly different way, so I wanted it to come back to somewhere up in this all of this here, which it did. But from how I trade now, I'll try and take both. So I'll try and take this one here, and then if it come back, I'd be trying to take that one as well. Um, but yeah, so the higher of the two time frames is the direction you want to be trading. The lower of the two time frames is your kind of your final reminder that final confirmation, sorry, that you're kind of going to be getting involved into a trade. And then, like I say, you can just use from the previous, obviously, subjects, you would expect price is going to come and fill an imbalance, which is where your entry should be. For sells, would you say you'd want it to be an imbalance? Your entry would be just above it because, like I say, price is generally coming for imbalance to fill before it goes. So that that puts that together. The couple of obviously I've just gone over the higher and the medium here. It's exactly the same with the medium. Obviously we've got an orange one down here, and the lowers medium lower being my one, but it's exactly the same process. Price has come, as you see, price has come back into the top 25% ish of this. So if I quickly, I'm not going to actually draw the numbers on, but we say this is one here, two, three, four down here. Price has come back at 25% of this one. It's come back and then given lower time frame breaks to the downside. So that's 15. So yeah, this is the what sell here because this is the low that puts in that high that take it up. So once this one gets broken here, this one's your confirmation because that's your lower of the two time frames telling you to get involved, basically. As long as you're expecting the higher of the two timeframes to continue in the direction that you want in to trade, obviously. And then obviously you can set your once you're tapped in, if you're brave enough, obviously you anticipate from here once it's pulled in there and giving you the lower time frame, the lower of the two time frame direction breaks, you would then anticipate it's at least going to take this low here because obviously if I was to ask any of you to draw a structure, a bearish one, you're all going to draw it something like this. Yeah, something like that. So if you get in up here, if you catch the sell from up here, you're expecting it to take this low. That's obviously it's not guaranteed, but that's generally the most probable thing is it's going to pass this. So obviously, if there's nothing to the left, we don't know how far, but we kind of know it's going to take that low. So your TP, if you get in, if you catch that, your TP should be just beyond this somewhere. Obviously, the safer option. There's levels of safety as well, so you could set it before if you're if you're not comfortable, if the numbers get a bit high. I mean, this one I've got marked here is this little box here. So we're on the daily, so it looks tiny, but that's a 80R trade there. If you take it just past the low that I would said you would expect it to take, you're hitting 100 plus, and overall it's reached 220 nearly. So that's kind of retirement trade in it. So a 200 fold. Um, But obviously, holding way below here. Obviously, it's nice if you're seeing this huge push down, but you don't know where it's going to sort of turn around from because you've got no data to the left to. Don't think we have any. I don't think it's. No, there is actually on this occasion. Yeah, you can maybe find some imbalance here that you think it's going to reverse from, but this is from a long time ago. So I don't know how well it would stand up. Um, But yeah, target would be at least just below that structure low there. I'm coming off the monthly now. Um, other rules for structure are so obviously in a I can't remember what I've said now. Minimum of a four candle. So sometimes you're going to see the structures and they're going to be really like they're going to happen in four or five candles. I'd kind of say that you want them to be at least the same color candles. So we've got a long run of candles here. That would be, I would kind of class that if it met all the other rules. Now, obviously, it doesn't on this occasion because the highs up here and the lows here. So it's when in a trend, bearish market, bearish conditions. When that low is taken here, how we're determining the high is it's the furthest point, the highest point price reaches before it then retakes the low point. Obviously, this is the same for bullish as well. So if it was the opposite way, I would say it would be the lowest it pulls back before the high is taken. So low's taken there. That low, this price here passing this low there means that this is the highest point. That becomes the new lower high. I'm getting better at this. It's only been a year and a half, I think. Let me just try and find. I feel like I'm missing a rule out on this, so just bear with me a sec. Previous structure is valid. Yeah, so the previous on this occasion. So because we're in bearish, this is our current live structure, meaning that if we think we're currently lower time frame bullish. Yeah, bullish. Dollar's gaining strength. Obviously, dollar's the first one in this drawing up here. Now, if the war wasn't going on, or if it ends fairly soon, like we can get back to dollar weakness. So if price comes up into this top 25% up here of this leg, because this is the high, let me just move my coffee. I need to delete some of these drawings as well because I've got so much shit on it. Can't help everybody. Delete some shit. Delete all that, don't I? So this leg here, I'll number it again as well. There's one, one, two. So 1 to 2 is the current live leg we are in. So once price comes up into starts getting up here, now I'm only guessing and hazarding something like that. Let's say price comes back in something in here. We can then now I'm on the daily, so and this is what I've got marked up as a 15-minute structure or medium. If price comes up in and starts giving lower time frame breaks to the downside, that could be an indication that price is going to tag in something in there and then make a new lower low. If it doesn't give you the lower time frame breaks to the downside, we could just assume it's going to take this high here and then we're going to see some. I mean, we'll get a retracement at some point, I'm sure, but from there we would then anticipate we're going to start getting some 15-minute swings. And as I said here, obviously, if I was going to ask you all to draw a, a structure, it'd be something like this for bearish. Obviously, it'd be the opposite for bullish. So, yeah. So, bearish, bullish, obviously. So, if we take that high, we're going to start seeing something like that up here until it obviously reaches something in here. It's after. So, 15-minute bullish might take us all the way up here. We could get up to this four. Obviously, this is the 4 hour structure, this big red one. We could come up at somewhere into five to then sell off majorly again. So in depending on how quick that gets there, towards the back end of the year, maybe we might start seeing major sells on this because ideally, so what we kind of say is the higher time frame is always takes the higher time frame is takes precedent or is stronger than the one lower, kind of. Um, so if so like this is 15-minute trending up, starts trending upwards. Obviously, I don't know if it's going to. We'll find out when it gets up here, obviously. Um, the 4 hour at that point, 4 hour is still bearish. Obviously, we've got one, two, three, four, five, and six, obviously, that we drew. Um, the the phased anticipation would be that the 4 hour is just going to say pull up into something like this and then maybe make a new low, turn that red because that's what it'd be. Yeah, because obviously this is what we would all draw. So this is what we kind of anticipate as long as we get the lower time frame breaks in here first. Now, obviously, I'd never say just getting up here because the 4 hours doing this, because the 4 hour could do that and then start doing bullish 4 hour swings. We don't know. But the with how it is at the minute, this is the first thought and what can keep us out of a bad trade if it does pull back into this sort of zone, like I say, is if we don't get the lower time frame breaks to the downside, because it's if it does do this, just put that 15 and the 4 hour in the same sort of zone, same line. Yeah. That's the structure. So it's that there, yeah. So if we don't get the breaks to structure, the 15-minute will continue up, and then obviously this red one would go with it, kind of thing. Um, and then once we get up there, I kind of want to see break below this one. Now, this is obviously just roughly drawn. It's not anticipating it's going to follow anything like this. But once it breaks along there, it's going to pull back, and then we'll be looking for an entry, and then we're going to continue the 15-minute to the downside. I'll turn this orange in a sec, so it's time frame relevant. So I've got another drawing somewhere as well. I think Stuart posted something, and I have pinned it in the supply and demand. But this drawing here, so it looks like obviously I've got the red line here. That's my high time frame. Obviously, the 15-minute is going to make up the 4 hour swings. So if we look in here, I'll find a better one. But if we these small zigzags in here, these are what I would class as my 15-minute structures. The the bullish swing, so we get one push, two push, three, four, maybe five 15-minute bullish swings in here. And then we get one, two, three, four, five bearish swings. And then we get this. This is kind of in the way, but if I just like we get five there, six, seven, eight, nine. So there's technically like nine-ish, possible nine bearish swings in all of this. But this is like a K ball, so I'm kind of ignoring it. But yeah, nine bearish swings because we're 4 hour bearish. So the nine bearish swings hitting this occasion make up the 4 hour bullish, 4 hour bearish leg. In this one, obviously the five bullish swings made up the 4 hour pullback. So the 15 makes up the 4 hour. The 15-minute trend swings make up the 4 hour time frame swings. So bullish, bullish 15 makes pullback on the 4 hour that's bearish. Obviously, if it was bullish, it would be the other way around. um, there's no set amount on or average on how many 15-minute swings will make up a 4 hour leg, but we can kind of use everything else we've discussed tonight to kind of determine where we think these points, turning points might be. So obviously there would be if huge trend line liquidity is made, we can kind of anticipate we might start seeing a reversal in some of these places. Now we might have something going on with liquidity somewhere in here. I'm just going to take a quick look. I think it's way off to be fair, but magnet on. Now, if this is bang on, fucking ace. That looks pretty good. Yeah, that looks good. Maybe a touch short here, but for the sake of it, I'm fucking mint. Um, and this is obviously I've kind of gone back to liquidity as well. So at what time are we at? Don't think I'm gonna have a time to put it all together video. But if you're on it with liquidity, so touch here. So once price pass beyond that liquidity, obviously we could then anticipate that we're going to start maybe seeing reversals. Like I say, taking it doesn't mean reversal, but if we're far extended on the 4 hour. So this 4 hour leg's way beyond this 4 hour low here. So you can kind of start to think we're definitely due a pullback. If you'd have had this trend line marked and it's got swept, you can kind of anticipate we're due a 4 hour pullback. It's taken liquidity. Is this going to start pulling back? And now what we would be wanting to wait for is now obviously there's different ways to get in this. I'll probably cover that next week, or I might even do a live in the week and continue from this. But if we, like I say, if we take this high, then I think we're going to get a big 4 hour, the major 4 hour pullback, which is going to pull up above this. basically above this low here. Now I say that I say this low. I don't think I've ever really said this. So the idea why I'm saying this low here is because if it's going to continue bearish on the 4 hour, which it probably will, because like I say, it's going to be late in the year by the time it gets over here, I think, is something up here. If it's going to stay bearish, something up here is the cause of this major 4 hour low being taken, which is liquidity. So chances are it's going to come and mitigate something up in there, whatever caused it, to then continue to the downside. Obviously, it might create more liquidity up here somewhere. It might already be there. I've not looked, but that might be it there. Might not be either. So no, that's yes, that's on it there. That one's short, just that one's just over. So I don't think that's it. But you can kind of see how I would look for liquidity, a trend line in one of these to try and determine whether I think price is going to come up to this high. Now, if that was a perfect trend line and price comes up, if it comes up fairly quick and it takes liquidity, there's a chance it's going to take maybe the 4 hour high, which is over here. But if it takes, let's say it takes a couple of years, then it's going to be a huge sweep. So the longer it takes, kind of, I would least expect it to take the 4 hour high, which would then keep us 4 hour bearish. And I would expect this kind of play to play out. If it happens really quick, I would more anticipate it to take this because then it's probably going to take this high because the sweep's going to be because the angle, like the longer it takes, the lower this line's getting, kind of thing. um, yeah. Is there any questions on that, guys? I'm probably going to call it about there because we're on the hour pretty much. So
Not
no,
from me
That's
anyway.
good, thank you.
yeah. I mean, it was mainly for the newer guys that are going to hopefully watch it back, and Steve and Andrew that are on. But yeah, if there's any questions, guys, from anybody that watches it back or whatever, just give us a shout and I'll probably try and add on to this maybe in the week. I might do a live in the week.
Yeah, that was
Mate.
great, that mate. Nice one.
Yeah, I mean probably a lot. I mean I don't know how long you've been in, mate, but it may be a lot to process that. But
Yeah, it looks busy at first, but now I've watched that, it looks there's a bit more
yeah, well
understanding of it.
what I'll do if I jump on in the week, mate, I'll do a kind of putting it all together. So obviously I've chucked all the information at you, kind of thing, and built putting it in an order. So I mean, it's not that what I've just said is not difficult, Joe. It was
Yeah,
liquidity,
yeah, you can see it when
amount.
you
Yeah,
originally look at a chart like that, though, when you've not seen it. Is what I mean.
yeah,
It looks busy,
yeah,
but no,
yeah.
it's all right.
I mean, my charts always look really busy as well because I leave drawings on for everybody else. So
Yeah,
but yeah, like I say, I'll figure out when other people lives are on, and if I'm not clashing with anybody, I'll do like a Wednesday or Thursday night live.
yeah, mega.
And I'll do like I'll put everything in order and like a process kind of thing, and we'll go from there.
Brilliant, mate. Nice one.
All right, cheers, guys. I'll call it there. Any questions, just ask away in the chats, boys. I'll be about all week, obviously.
Thanks, buddy. Take it
Cheers,
easy.
pal. See you in a bit.
Cheers,
Have a good week,
guys.
lads.
Cheers, mate. Thank you.